Earnings back here with Nick Theodorakos. Let's talk our first name of the day, and it's a big one, Nick. Apple earnings out a couple, week and a half, 2 weeks ago. The stock has hung in there pretty well. It was interesting. They had some good news, like iPhone sales beat, but this China problem, this 13% drop in China is a problem, Nick.
Well, I mentioned it in the last segment here, but China is pushing towards their own chip manufacturing because they can't get and that includes smartphone chips, and that helps Huawei and other Chinese companies, and it definitely hurts Apple. When you couple that with the fact that the sanctions are real, and they're continue to limit who can buy Apple phones in particular, but other products as well. It just really handcuffs your largest sort of potential growth story. But you look at Apple's business model, and they need to sell devices, but the upgrade cycle is real. I mean, they're such a massive provider of services and devices that the cash flows remain really, really strong, kind of regardless of that upgrade cycle. And I think that's what the market's sort of seeing right now and saying, well, okay, they're not at all-time highs like some of the other Magnificent Seven names or the S&P, but they're not that far off it, and they've bounced a bit since those earnings because the cash flow is so strong. But what are they doing with that cash? They're buying back stock. They're paying dividends. There's a sort of I don't want to say a floor, but there's sort of a natural floor there because they have so much cash, and they're buying so much of their own stock. You can argue if that's the best use, and just the other thing I think that's sort of buoying this is they're the sort of edge, AI play, right? Like, what are they going to do with AI, right? What is the wearable going to turn into? Like, people are sort of speculating that it's going to be bigger than not, and there has to be something there. They're the most tight-lipped of all of the companies, so I think it's hard to sort of speculate exactly where they're going to go. But those two things to me, the AI play and sort of the cash flow position, kind of have buoyed this from what was otherwise a fairly weak earnings report.
Since 2019, the stock is up 349%. Even though full year fiscal 23, the revenue dropped 3%. But the stock just keeps marching on here. And the question is, this choppiness that we've seen the last year or so, it peaked up around $199. It's been up in this area. It didn't sell off significantly, but it got sold off with the rest of the market in the late second quarter. Here's the question. We've talked about high profile, right? Revenue's down for 4 quarters in a row, broke that streak, growth. Are we starting to turn up here? Is now not the time to abandon Apple?
I think it's awfully hard to say this is a company on the decline, right? I think they've got stuff to figure out. I mean, the watch set them back a little bit. China's setting them back for sure. But you have to imagine that those things are going to get figured out. The manufacturing relationship with China is a bit fractured, and they're moving some stuff out, and they're doing more AirPods in Vietnam. They're diversifying there. But
I can't believe they weren't diversified already.
That's sort of like the exact point. Like, look at Nike was so in bed with Chinese manufacturing, and they've diversified. Right? Like, you can't. It's hard. It's easy for China to come out and have bluster about that, but there's still so much manufacturing that goes on there. It's awfully hard as a business person to not sort of understand some diversification, and you have to think over time that they're gonna figure that out. I think the one thing that could change that and sort of spin that narrative more negative, we just talked about tariffs. If this war of words escalates into actual sanctions that are much more broad, I think that would certainly be concerning for a lot of stocks that have global exposure like that.
It sounds like such a common sense. Oh well, who matter? What does it matter if our prices come down, right? All the goods get cheaper. We can buy these goods cheaper. But the long-term view is it puts our companies out of business, and then we have to rely on them. If you're looking at short-term lower prices, you're not looking at the long-term picture in this group. By the way, China accounts for 17% of Apple sales. So it's not an insignificant number there. And with more restrictions coming or more restrictions here, it's not a simple
unless
thing to
they
get through, to
limit
navigate.
the general population from buying Apple products, that percentage isn't going to change a lot, because you look at the sort of population spread. And, it's government agencies. But that's a sort of a drop in the bucket.
Right.
Like right now, if it spreads, that's something. But it is kind of, to your point on manufacturing. It's kind of like the old Walmart narrative, right? If Walmart comes into your town, all the small businesses are gone.
Yeah.
And that is the longer term problem, right? That's
Right.
and I think that's. There's benefits to that model, but there's also there's also sort of a local issue with that, and it sort of feels like the offset to that is TSMC's opening manufacturing here in the U.S. Right, there is more push to bring tech manufacturing domestic.
Right.
What does that do to costs? I don't know. It's certainly not going to help the inflation story in the short term, but again, I think it's strong for U.S. manufacturing.
All right.